and welcome to the quarterly market update for Sharon Partners for the end of December 2021. I'm Kim Hope, a financial advisor with Sharon Partners, and I'm joined as always by Dr. Steve Garth, our external investment committee member. Thanks for joining us, Steve. Now, you and I have just started with the obligatory COVID conversation, as always. We're doing this remotely again. Steve, you're down in Sydney. I'm up in Queensland. And of course, COVID is the only topic of conversation to start every meeting at the moment, isn't it?
That's absolutely right, Kim. I'm sitting here in my office surrounded by a sea of COVID. I haven't got it, but everyone around me seems to have it.
It certainly seems like that. And of course, that has a big impact on our markets. What can you tell us about how the markets have performed over the last quarter?
Yeah, well, let's put up this chart and show you the Australian market over the last year. And to be honest, with all this talk of coronavirus, we have Delta variants and Omicron variants. You may have thought the market's not doing very well. In fact, it's done sensationally well, Kim. It's up by 17% for the year. Now, remember that the long-term average of the Australian market is 8 or 9%, so 17% is a super year. You can see the last quarter's a little bit flat, and that is the Omicron variant coming in, and the banks are down a little bit in the last quarter, which has pulled the rest of the market down. But overall, Kim, 17.2% for the full year return. That really is a great return.
Absolutely. But how have our international markets fared, Steve?
You know, Kim, if you thought 17.2% was great, well, over in Europe, they recorded about 24%, and in the US, up by 35%. That's in Aussie dollars. And what all that means is that the global markets are up by 29.6% for the year. And for the quarter, they're up by 7.2%. So despite coronavirus around the world and worries about rising inflation, markets around the world have done extremely well, with the exception of the emerging markets. If you have a look at the emerging markets, they are down for the quarter and they're only up a little bit for the year. But overall, Kim, when you look at a diversified portfolio, it's an absolutely fantastic year.
So, Steve, what can you tell us about bonds?
The thing about inflation, it pushes up bond yields. And while that doesn't mean much to people, what it does do when yields go up, bond prices go down. So, Kim, when we have a look at the returns of the bonds for the quarter and the year, that ain't so good. Cash, as I'm sure everyone knows, is still giving you a big zero, but Australian bonds and global bonds have had a negative quarter and a negative year. That's unusual, Kim. It's only happened a few times in the last 40 years. Unusual, but not unprecedented. And we shouldn't get too worried about a year where bonds are negative when equities have done so well.
Absolutely. And I think, on a more practical level, what our clients are really interested in is what that actually means for interest rates. And of course, you've got on one end of the spectrum, you've got our retirees who are relying on those returns and would quite like to see interest rates go up. And then you've got other people with, big mortgages and children that are quite happy with them staying low as long as possible. Thank you very much.
Yeah, well, we can satisfy both people here, Kim, because yes, interest rates are going up. So that helps the retirees, but they're not going up quickly and they're not going up by very much. So that's going to help the mortgage holders. If you have a look at this chart, Kim, it's a forecast of future interest rate movements in Australia. And the green line is the best estimate of where interest rates will be. And the sort of the shaded area gives us a little bit of wiggle room because it is a forecast. But what you can see is that right at this point in time, the RBA are saying no change in interest rates for 2022. The first rate rise won't happen to 2023. And then we'll see these modest rate rises. So when you look at that chart, even at the end of 2024, most economists are saying interest rates will be not much more than 1%.
Well, I think, Steve, that the one thing that we can be absolutely sure of is that 2022 is going to be another interesting year, and that perhaps even expect the unexpected. So thank you once again for giving us some real context behind what's happening in the markets. As always, we certainly believe that a well-diversified portfolio with asset allocation in all sort of facets is definitely the sensible approach to long-term investing. Steve, thanks so much for joining me, and thank you all for listening. We'll look forward to seeing you again in our next quarterly market update.